January to March, how is this period looking? Because October to December quarter, we've seen an impact, and you've said that in your statement that it was because of higher commodity costs, and it was also a challenging phase for the industry overall. How is the last quarter of Q4, last quarter of FY17 look like?
Demand was good. We produced well. This confusion in the last 3 days, which was to me completely unnecessary. If Supreme Court or somebody had told us 3 months ago, nobody would have had this impact. It was not necessary to cause this pain to the auto industry. If somebody wants to reduce pollution, reduce polluting vehicles. We've been saying cut out BS1, BS2 vehicles. No? The country will save on fuel, country will save on pollution, country will get a lot more taxes from new vehicles sold. Nobody does that.
Right.
3 days before somebody shuts it down, but I don't want to get into that. We've had enough discussion and debate on that subject. So Q4 was very good for us.
Yeah, because Tata Motors, your competitor, has said there's going to be an impact because discounting was at an all-time high. In some cases, discounting was 50% of the cost of the vehicle. That's what the company says. So you're a lot more bullish. We are yet to see.
I can't tell you the numbers.
Yeah, of course. Yeah,
but let me say this. I'll make 2 points. On March 29th or 30th, the day after this came, I immediately wrote an email to all my dealers saying that please do not panic. We are one family. Okay, we never have our dealers compete with each other. We give them exclusive territories. We tell them what processes to follow. And we told them, you are a member of my family. I will not dump you and leave. Not one dealer sold at a discount. They sold at many cases at premium prices because they knew Ashok Leyland would support. They had
Ashok Leyland in the last 2 days.
The dealers
did not resort to any kind of discounting.
If that was the case, Ronojoy, I wouldn't be sitting with 10,000 vehicles. No? I didn't push that because I knew I had this IEGR in my back pocket, the ace in the hole, as they say. And I knew that I could easily swap these engines, and I didn't have to lose engines. So why should I give it away in discounts? So that 20,000 rupees that I said, of roughly over 10,000 vehicles, about 20 crores. I'll easily recover that in my aftermarket. So for us, and by the way, as far as discounting is concerned, we have consistently gained market share over the last 5 years. People say, well, discounting is very high. If I was giving discounts to win the market share, it would be counterintuitive to say, because for the last 8 to 10 quarters, we've had double-digit operating margin, the highest in the industry, possibly highest in the world. How can I have the highest margins and yet gain market share if I was giving discounting? So I'm not buying market share. I can't afford to. My competitors have a lot deeper pockets than I do.
In the context of rising commodity prices, is there more headroom for your operating margins to grow, Mr. Dasari?
Well, rising commodity prices should not give me higher margins. It will be...
precisely. No, that's what I'm saying. In the context of higher commodity prices, is there still headroom? Or do you feel that from here on, you may have peaked and perhaps your margins will only come down?
No.
Or is there
One
of
the things that we have done very strategically is we have said that we will not depend only on domestic trucks. Look, Ronojoy, in the end, what is cyclical in our business is 2 words, domestic and trucks. So we have pushed very aggressively to say, even today when we had a dealer conference, we said, I have given them a target that for every 2 vehicles I sell in India, I must sell 1 outside. Okay. Over the next 5 years, I want to achieve this. That's substantial.
So every 2 vehicles you sell in India, 1 outside.
Right. So 1/3 of my sales must come outside. So that takes care of that domestic portion. Second is trucks. I have businesses in spare parts, defense, LCV, which you were starting to ask about, bus and power solutions. I have told them that U5 should be as big as the truck business. Truck business is going to grow with this IEGR and all of that. You have to grow faster. So our LCV business is going to grow very fast. We're going to quadruple it over in the next 3 to 4 years. Our spare parts business is going to quintuple in the next 5 years. Our defense business, we are targeting that, this is a long gestation business, but in the 10 years, we will make it 10x what it is. I won 11 or 12 out of the last 13 tenders that we have competed in. Our power solutions business is very good. For the first time, we are starting to export our engines Now, this you will find this interesting because you are also a supporter of Indian ingenuity. We are exporting engines. We've just now won an order. Our Neptune engines directly to United States. So don't tell me that Indian companies do not have the wherewithal to meet Euro 6 and Tier 4 norms of US. We are exporting engines.
When do you start exporting these engines to the United States?
This month.
Okay.
Very small order. But we have got the capability and we've got the cost structure to be able to compete.
How much is the order still?
This is still at pilot level. We're going to make that vehicle with them. We're going to test the vehicle. We've done the trials here. It's very successful. So they've given us an order for 20. But the fact is, this is just the beginning.
Right.
Okay. World over, our range of engines, where we have the lowest cost per horsepower in the world to make an engine, the demand for our size engines world over is about $10 billion. Okay. Even if I can achieve 10% of that, that's $1 billion worth of revenue that I can create.
Right.
Which I don't have today. So we are doing lots of stuff on the power solutions thing also. So these 5 businesses are now, last year our spare parts grew 30% while maintaining the 35% margin. Okay. So if I can take this and it's now 1,000 crores, if I can triple it to 3,000 crores and still make a 30-35% margin, I'll make 1,000 crores profit. That's more profit than I made last year.
Right.
Just from spare parts. LCV, by the way, we make decent margin. Contrary to the world over where people don't make money on LCV, now that I've got freedom from my joint venture, which was not going on very well, we are launching 1 new product every quarter. Very fast. Every quarter we're going to be launching a new product, and we will substantially increase our investments as well as new products that will come out to gain our market share.
You mentioned 1/3 of your revenues that you would want from exports in the next
5 years.
In the next 5 years. From currently, how much is it?
Oh, last year we sold 110,000 vehicles India, 11,000 outside, so about 10%.
10%. Okay. So in the next 5 years, you would almost more than.
So we are building we have doubled a plant in RAK and we are doubling it again. We just launched a new school bus in Saudi Arabia, which was very successful. We're launching the Boss in the Middle East. We launched a school bus called Oyster. I told you about this new order that I got in Ivory Coast. So we're building a plant in Ivory Coast.
US, okay.
And we are going to be building a plant in Kenya. We're looking for the right property to buy and do that. So
this is all part of your de-risking strategy.
And growth. And growth. It's, so.
And when do we see, when does the Ivory Coast plant be up and running?
12 to 18 months.
12 to 18 months.
Yeah. Same for Kenya, maybe 18 months.
Debt was a big issue some years ago. It was over 6,000 crore rupees. Debt to equity was 2.2, 2.3 at one stage.
2.4.
2.4 at one stage.
Yeah. I used to joke internally with my team that every morning before I have my first cup of coffee, I have to sign a check for 1 to 2 crores, regardless of whether it's a Saturday, Sunday or a holiday. Our debt was as high as 6,800 crores.
Yeah, that's right. Exactly.
Yeah. So
now it's under 1,000 crore. At the end, last year it was 1,100 odd crore. You've ended the year.
It's hardly anything. Whatever I have is long-term debt, which is ECB. Very little short-term debt. That ECB is at a very low interest rate. Our weighted average cost of debt is less than 7%. So
initially, when you're taking charge, it was to steady the ship. So there was of course going to be a gestation period of that. That is over. Now those concerns are in the past. Now you're looking ahead.
You cannot never become complacent. In our business, it is cyclical, so you have to always be watchful. You have to make sure that you are forever remaining competitive.
Right.
Look, there was a time in 2013-14, our share price was 13 rupees or 12 rupees or 11 rupees, something ridiculously low. Our EBITDA margin was 2%. Our debt was 6,800 crores. Debt to equity was 2.4:1. Now it is 0.4:1 or something very low. In fact, I've told my guys, I no longer want to use the metric of debt to equity. You and I, Ronojoy, you will not spend more money on your credit card than what your bank can afford. So why should we run a company like that? So I've said we should have a debt to EBITDA metric and say that has to be less than 1. Your debt cannot be more than the EBITDA that you guys will generate this year.
Okay.
So In a cyclical market, I cannot build up debt. Okay, so I cannot build up fixed costs. So we exited a lot of these unnecessary things that we had gotten into, and we paid down our debt. For the first time in the history, I don't know how many truck companies or automotive companies can do that. We finished the year with a negative working capital.
That's right, yeah.
So
that was an FY16.
FY17 also we finished with a negative working capital. I can't tell you exactly how much, but that's careful management of our working capital.
Vinod Dasari, absolute pleasure. Wish you all the luck.
Thank you very much.
And have a great year ahead.